Okay folks, welcome back again. We're going to make our third purchase of the Vanguard S&P 500 exchange traded fund. So £120 again each week. And just before I send that through, actually, if you can see behind there, you see the green dashed line is the average price that we've got from the previous purchases, and you can see the market has fallen slightly down to the level where the blue line is, and we are actually currently sitting at minus 445 or 1.5% of the must be 240 invested to date. So I mentioned before about dollar cost averaging. Watch the green line when I send this through. See if you can see it move. It should reduce, or it should fall slightly. And that's the power of dollar cost averaging. So we're sending that now. And it has just executed. I haven't seen the line move yet, it maybe did. And the other thing that I wanted to show you is in practical terms what dollar cost averaging looks like. If we go into the history, we can actually see the amount of shares that we bought each time. So the first purchase, so each time this is 120, as you can see. So the first purchase we got 1.83 shares. The next one last week there, because the price had fallen, we were actually able to buy slightly more, 1.85. And today you can actually see that we've got nearly 1.88 with the price having fallen again, which is perhaps a bit concerning if you're not used to this, but if you are, and when you become used to it, you realize that it's a normal event, and it's good for us because we're effectively getting the shares on sale. So today we've now got a market value of 355, and we are holding 5.56 shares of the exchange traded fund. Thanks for watching, guys. Please do have a look at the other videos and the logic behind why investing in the stock market can give you financial freedom, the ability to retire early from the NHS even if you are on band 2.